Welcome to Breaking News to Trading Moves. We're doing a technology deep dive today, really zeroing in on what Micron Technology's latest performance figures are telling the market.
That's right. The numbers they put out for Q4 fiscal 25, they're more than just about Micron. They kind of act as a map for the market right now. Our plan is to use that data, particularly the intense demand for AI-specific memory, to map out which segments, which companies have tailwinds and which are facing some headwinds.
Okay, so let's kick off with those numbers from September 23rd. Micron reported revenue of, what was it, $11.3 billion?
$11.3 billion, yeah. And non-GAAP EPS hit $3.03. But the guidance, that's where it really gets interesting.
Right, the forward look. They're projecting $12.5 billion in revenue for Q1 fiscal 26. And an adjusted gross margin around 51.5%. That's quite a jump.
That margin really says a lot. And the key driver behind that pricing power is high bandwidth memory, HBM. HBM revenue was nearly $2 billion just in Q4. And get this, Micron said their HBM capacity for all of 2026 is already sold out.
Sold out for 2026. Wow.
Yeah, think about that lead time. AI data center memory is now making up something like 40% of their total sales. That shift, the product mix changing and the pricing power, that's really setting the tone for the whole tech supply chain.
Okay, well, when memory's sold out over a year in advance, someone's definitely benefiting. Let's start with the winners. The U.S. memory makers seem like the obvious first stop.
Absolutely. It's about leverage. Micron's results confirm DRAM supply is getting tight, NAND pricing is looking better, and this HBM upcycle isn't short-term. It looks like a multi-year thing. So their peers get a lift just from these market conditions improving.
So Micron Technology itself, clearly number one beneficiary here. They're riding that AI demand for DRAM and especially HBM, leading to better pricing all around.
Exactly. But it's not just DRAM. Look at Western Digital, WDC. They're a key U.S. NAND supplier. AI server buildouts need huge amounts of fast enterprise SSDs, right? That's NAND-based. So as supply tightens overall, premium storage like that benefits.
Okay, makes sense. Moving up the stack from the memory itself, what about the companies using these components, the AI accelerators and platforms?
Yeah, this is where HBM availability becomes almost a limiting factor. HBM3E, the next-gen stuff, it's essential for these top-tier AI GPUs. It dictates how fast data gets to the processor. If HBM supply is constrained, GPU shipments can slow down. It's that critical.
So Micron ramping up capacity, hitting that $2 billion in Q4 HBM revenue, and being sold out for 26, that directly helps the accelerator guys keep shipping product.
Precisely. It's crucial for NVIDIA. They're a core HBM customer. More HBM supply means they can keep their data center GPU production lines running.
And for AMD?
Same story for advanced micro devices, AMD. They're pushing their MI300 and the upcoming MI325 accelerators. Getting enough HBM is absolutely key for them to scale up and compete effectively. The memory supply enables their whole ecosystem development.
Got it. Okay, third group of winners, the companies that make the machines to make the memory. Wafer fab equipment, WFE.
Right. You can't build complex memory like HBM without very specialized, very expensive tools. And Micron's spending shows their commitment. Their CapEx for fiscal 25 was around $13.8 billion.
$13.8 billion. That's a lot of investment.
And it's focused specifically on advanced nodes and boosting this complex HBM production. That level of spending means sustained demand for the WFE suppliers. They don't just need more machines, they need extremely advanced ones.
So companies like Applied Materials, AMAT, they provide process tools used for both standard DRAM and the intricate stacking needed for HBM.
Yep, they benefit across the board in advanced fabs. And Lam Research, LRCX, is another key one. HBM involves stacking multiple layers of silicon, maybe 8 or 12 high now. That demands incredibly precise etch and deposition tools. When memory gets that vertically complex, demand for Lam's kind of equipment really accelerates.
Okay, so a clear picture.
Yeah.
Component makers and equipment suppliers are doing well due to tight supply and high demand. But someone's got to be paying for that, right? Let's flip it. Who's facing headwinds because they have to buy this expensive memory?
First up have to be the PC and device OEMs. The same factors driving Micron's success, tight DRAM, better NAND prices, directly inflate the bill of materials, the BEMM costs for consumer electronics.
So the cost to build a laptop or a phone goes up.
Exactly. Think of the BEMM as the ingredient list. If DRAM costs spike, the total cost for, say, HP or Dell to build a PC goes up, and that squeezes their margins. The market's clearly prioritizing high-margin data center memory right now, and that puts pressure on the consumer side.
Which hits companies whose margins might already be pretty thin, like HP Inc., HBQ, they seem sensitive to component cost changes.
Very sensitive. Every extra dollar for memory can directly impact their profitability, especially since they compete a lot on price and volume.
And Dell Technologies, Dell EL, similar situation.
Yes, Dell too. A big chunk of their business is client PCs, so their product mix is definitely exposed to these rising memory prices. They either pass on the cost or take the margin hit.
Okay, OEMs feeling the pin. What about, well, this next one seems a bit counterintuitive maybe. The hyperscale spenders. You list of them as facing near-term headwinds.
Yeah, and new term is the key word there. Long term, they're obviously huge beneficiaries of AI, but right now, they're paying top dollar. The premium pricing for HBM, the fact that it's sold out through 2026, if AWS or Azure needs that memory now, they're paying peak prices. They can absorb it, but it means sustained, very high capital expenditure just to build out the AI infrastructure they need. That definitely pressures their current free cash flow.
So Amazon, AMZN, with AWS constantly building out, they're locked into these high costs to keep up.
Pretty much. They have to secure massive volumes of this specialized, expensive memory. It's like an arms race, and it's costly.
And Microsoft MSFT is in the same boat with Azure.
Exactly the same dynamic. Expanding Azure's AI capabilities requires continuous, high-intensity CapEx. They can't really afford to slow down their AI build-out, so they're basically committed to paying these premium memory prices for a while.
All right, one more segment, feeling some pressure. HDD-centric and legacy storage providers.
Right. As AI workloads get bigger, they need faster data access. That means high-throughput NVMe SSDs are increasingly preferred over traditional spinning hard drives. Plus, we're hearing reports that supply is tightening and component prices are rising across the broader storage market, not just HBM.
So companies heavily reliant on hard disk drives, HDDs like Seagate, CTX, they're potentially losing out.
Their market share in HDDs is under pressure, yeah. SSDs are capturing more of that AI storage demand that needs speed and low latency. HDDs still have a place, but the growth is elsewhere.
And storage array vendors like NetApp and TAP.
They face kind of a double challenge. First, the cost of the flash components they use in their arrays is going up. Second, there's that general trend towards cloud-based AI storage rather than solely on-premise arrays. It's a tougher environment for them.
So this Micron data really does lay out a map of who's benefiting and who's feeling the cost pressure from this AI memory demand.
Yeah, what really stands out is just how much pressure AI demand is putting on the whole supply chain. The capacity limits in memory give component makers and equipment suppliers a strong pricing advantage right now. But that same scarcity and cost directly pressures margins for device makers and forces the hyperscalers into this really expensive investment phase.
And we talked about those hyperscalers, AMZN and MSFT, being near-term losers just because of those high investment costs. So here's something for you, the listener, to think about after this. If HBM capacity is sold out through 2026, forcing these huge companies into continuous, costly build-outs, how long does that investment phase last before it really translates into massive operational profits from AI? And maybe what happens to smaller companies that just can't compete for these scarce, expensive memory resources?
Okay, before we wrap up, we need to be very clear. This discussion was based on our analysis of the underlying research available to us. This is not financial advice. It's definitely not a recommendation to buy or sell any specific stock or security. What you've heard is purely the opinion of the author of that research.